The US economy is like a high-speed train that suddenly decided to cruise at half the speed. And everyone on board is wondering, what just happened? Yes, we're talking about slowing GDP growth and cooling labor markets. Topics that may not sound thrilling but are affecting all of us in ways we might not even realize. Let's start with the basics. GDP, or Gross Domestic Product, is the total value of all goods and services produced in the country. Think of it as the ultimate economic report card. Right now, that report card isn't getting the straight A's it used to. And the cooling labor market? Well, that's like showing up to class and realizing half the students are out sick. In the last quarter, the US economy grew at a slower pace than anticipated, and it's not just economists scratching their heads. It's everyone from Wall Street analysts to small business owners. Some are blaming high interest rates, others point to inflation, and a few just blame the weather. Seriously, it's always either too hot or too cold for the economy, isn't it? Now let's talk about the labor market. For years, we've seen a red-hot job market where workers had the upper hand. Companies were practically throwing perks at employees: remote work, gym memberships, even puppy therapy in some offices. But now, the labor market is cooling off faster than leftover pizza in the fridge. Job openings have started to decline, hiring freezes are becoming more common, and layoffs, though still relatively low, are picking up in certain sectors like tech and finance. It's a far cry from the hiring frenzy of the last few years. Suddenly, job seekers aren't getting 10 offers by breakfast, and employers are beginning to breathe a little easier about their budgets. So what's causing this slowdown? One major factor is the Federal Reserve's interest rate hikes. When rates go up, borrowing becomes more expensive. For businesses, for consumers, and yes, even for your cousin who was thinking of starting a gourmet avocado toast food truck. Companies pull back on investments, and people spend less, which slows economic growth. Another culprit is inflation. While it has cooled compared to last year, it's still sticking around like that one friend who just doesn't know when to leave the party. Higher prices for essentials like food and housing are squeezing wallets, leaving less money for discretionary spending. And when consumers stop spending, the economy starts slowing. Let's not forget the global picture. Slower growth in key trading partners like China and Europe has also added pressure. When their economies sneeze, we don't exactly catch a cold, but we definitely feel a draft. But let's get real. What does all this mean for you? If you're a worker, you might notice fewer job openings and less aggressive pay raises. If you're an investor, the stock market might feel like it's on a bit of a roller coaster, with companies navigating these economic headwinds. And if you're someone just trying to make ends meet, you're probably hoping all these economic debates lead to lower prices at the grocery store. Of course, it's not all doom and gloom. Some sectors, like healthcare, renewable energy, and AI, are still growing strong. If you're looking to pivot or future-proof your career, these areas might be worth exploring. Think of it this way. While some doors close, others open, and sometimes they have now hiring signs on them. But let's not ignore the elephant in the room: consumer confidence. When people start worrying about the economy, they tend to spend less, and that creates a feedback loop that can make things worse. It's like being at a buffet. If everyone thinks the food is running out, they start hoarding, which ironically causes the shortage they were worried about in the first place. So how can the US get back on track? Economists are split as usual. Some say we need to focus on targeted fiscal policies that stimulate growth without stoking inflation. Others argue for a hands-off approach, letting the market correct itself. And then there's the crowd that believes the economy just needs time to breathe and recalibrate. Translation? Nobody really knows. But hey, let's not underestimate the resilience of the US economy. It's bounced back from recessions, wars, and even the great toilet paper shortage of 2020. There's a reason people still bet on American innovation and adaptability. Thanks for sticking with me as we broke down the complexities of slowing US GDP growth and cooling labor markets. Whether you're a policy wonk, a small business owner, or just someone who wants to know why eggs cost more than your Netflix subscription, I hope this helped clarify things. Remember, the economy is like the weather. It can change fast, and we're all just trying to figure out if we need an umbrella or sunglasses. Don't forget to like, share, and subscribe for more updates on how these trends impact your life.